Peter, let me ask you this about the inflation hedge piece of the argument that you're making. Obviously, a lot of people make that argument as well, and they do hold gold in their portfolio. But at the same time, with the Fed spiking the punch bowl, as you have said, we have not seen the inflation emerge the way people have expecting. That's part of the reason that they've dumped gold.
They are spiking the punch bowl with inflation. That inflation is the expansion of the money supply. Quantitative easing is a euphemism for inflation. All the central banks are inflating. That's what they're doing. That's inflation. Looking at the effect of inflation as measured by the government's CPI index is meaningless.
Right, but we talked about this last time. The market isn't really looking at it that way. The market doesn't see inflation.
No, but the gold market doesn't care about the CPI. It cares about real inflation. This is all government propaganda trying to convince us that we don't have inflation.
Peter, you are so far off base. Chinese CPI, whatever measure you want to look at. Peter, you're miles off base. Chinese CPI is at multi-year lows. European CPI at multi-year lows.
You're not even in the ballpark.
Developed market CPI is its lowest level since October 2008. To say there is inflation, to say there is pricing pressure globally is incorrect.
No. How do you know, excuse me, but how do you know where prices in China would be if the government wasn't printing all this money? Maybe prices would have gone down by 10%. But because they didn't, there's massive inflation. A productive economy lowers prices. Lower prices are the result of economic growth. And if prices aren't falling the way they're supposed to, if consumers are denied the benefit of falling prices because governments have created inflation and stolen that benefit away from them, you can't say there's no inflation. In the meantime, all the money printing distorts economies, it blows bubbles, it leads to all these misallocations of capital and resources. It does tremendous damage to the economy.
Safe haven aspect, you don't think that investors are buying into that anymore? And if that's the case, how low do you think gold can go?
Look, I think, Jackie, that gold tends to spike in times of geopolitical risk. And again, there will be buying of gold if the situation with the Ukraine does deteriorate. I think it is unsustainable. Look, my base case for gold going to $1,000 over the course of the next 12 months is predicated on global rising real interest rates. That's the main reason why gold will go down, because if it is the safe haven asset that people claim it is, and the world is a less risky place, and I think you only have to look at where credit spreads are trading, etc., to see that, then gold doesn't really have a place in portfolios, just as we're going to see yen weakness, Swiss franc weakness, and weakness in developed modern markets.
Yeah. All right, Peter, summarize your thesis and what's your target?
Yeah, I've been buying gold for over 12, 13 years. I've been recommending it to my clients, gold stocks. Not once have I bought gold because of geopolitical risks. I have never even considered that. People that talk about that are the people that don't buy any gold. I've been buying gold for the same reason for the last decade, and it's because central banks are creating too much money, there's too much inflation, interest rates are too low, and so I want to store my purchasing power in something that central banks can't print. Well, meanwhile, during that time period, gold has gone from under $300 an ounce to a high of $1,900. We've pulled back. I think we're headed much, much higher because they are not going to stop these presses. They are going to run them in overdrive.
How much higher, Peter? How much higher and in what time frame?
I don't know the time period. They're just going to trend higher. They're going to go a lot higher. I've said $5,000. They'll go higher than that. I don't know how much higher the price is going to go. And, of course, in different currencies, depending on how much inflation, I'm more bullish on gold in terms of dollars than I would be on the Chinese currency.
But you yourself have told me on this show that you think the Fed is going to continue with quantitative easing. If anything, stop the taper and have to do more easing. If that's the case, then the market continues to go higher and nobody's going to want gold.
If the Fed continues with their taper and ends QE, we will be back in a recession. The stock market will be in a bear market. The real estate market will be in a bear market. And then what is the Fed going to do to respond to that? The only thing it could do is print more money and restart the presses and do more QE.
Peter,
the entire phony recovery in the market is based on the Fed. The Fed can't leave the game.
Peter, how do you justify the following? Last year you had the greatest balance sheet expansion across global central banks in history, yet gold had its worst performance in 30-odd years. Under your logic, that shouldn't make any sense.
No. Well, look, do you ever trade anything, buy the rumor, sell the fact? Gold rallied for over a decade in anticipation of that. It finally had a pullback. We shook out some of the weaker players. Meanwhile, gold is outperforming all the other assets in 2014. Everybody was writing its obituaries, including Goldman Sachs, at the end of 2013. Gold's going up. We don't know where gold's going to be at the end of the year. What if gold is at 2,000 or 3,000 next year? What are you going to say then?
Well, I don't think it'll get there, so I don't think we'll be having that discussion. But
well, did you think it was going to get as high as it did? What were you saying about gold? What were you saying about gold in 2004 and 2005 when it was $400 and $500 an ounce? Were you saying it was going to 1,000, or were you saying it was going down?
I didn't have a view on gold back then because I have the same views that I have now, that it is purely about supply and demand primarily. But, Peter, to make the argument, that it's buy the rumour, sell the fact justifies the greatest move in 30 years versus the greatest balance sheet expansion in central banking history is a bit of a lame argument, I'm sorry.
All right, gentlemen, we are going to have to leave it there.